Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, it's a sunny morning out here, and in fact, I'm very excited and grateful for life to be with you here this morning one more time. Let's run through our daily routine by confirming that we are good to go. So let's see if we are on the same page here. So if you can see my screen, you can hear my voice loud and clear without distortions. Please feel free to let me know in the comment section by typing in hi. So typing hi will make me will confirm to me that everything is quite fine on your end, and then we can kickstart the session. So I look forward to your feedback, please, and thank you very much as you do so. Okay, so just loading up my comment section. All right. Thank you, guys. Thank you very, very much. I see a comment here. Kuar123. Good morning. Zuri123. Good morning to you. Supap Son says he's new with us. He or she is new with us. Glad to have you around with us. Good morning. Dr. Timmy, good morning to you. Ramona85, good morning. Sasol234, good morning to you. Hello, Carrie, thank you very, very much. Good morning to you too as well. Super Son, I see you again. Amoriz9, good morning. All right, you guys are wonderful. Good morning to you. Dr. Timmy, one more time, good morning to you too. Thank you very, very much. I think with this bucket of feedbacks, I will take this as a positive confirmation that we are good to go this morning. So on this note, I welcome you once again to another promising episode of our daily series dedicated to price action based technical analysis right here on the Extra and Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you deep into the financial landscape where we will be dissecting the current market conditions using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action on the assets on our watch list for this week. So far this week, we have been monitoring four major financial assets, which includes the US All Spot, the USTech100, the GBPUSD, and of course, the XAUUSD, popularly known as the gold spot. And in fact, since the beginning of the week, it is quite obvious that price action has been very, very choppy across the assets on our watch list. And of course, this should not get us by surprise at all, as we do know that we expecting a handful of high impactful events for this week, and because of this, majority of key players in the market are likely going to be stepping aside, waiting for cues from these fundamental factors before making any investment decisions. And as a result of this, we've witnessed a choppy situation, and we are going to be diving deep into those structures to see how we can actually position ourselves for the next move. So you don't want to miss out on the ideas we will be deliberating on today. So I encourage you to stay tuned in so you don't miss out on what we will be talking about. For those of you who are joining us for the first time, you're highly welcome on board, and I'm very, very sure you will be wondering what this is all about. Well, the Extra and Speed Live platform is an avenue where we as technical traders come together on a daily basis as a community and engage in follow-ups and reviews of our current trading positions in preparation of the New York session. The session usually kickstarts 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during the course of the session so you don't miss out on any of the valuable ideas we will be talking about today. My aim is to equip you with the knowledge and skills necessary to make informed trading decisions independently. The more time you spend with me, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So, once again, I extend a warm welcome to you and I encourage you to actively engage in the comment section. So, with that being said, here, let's dive right into the business. And as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. So, based on the assets we're monitoring for this week, we are going to be focusing on high impactful events from both the United States and the United Kingdom economic docket. Now, for today, Tuesday, November 28th, we do not have any high impactful event. So what I did here was to include the medium impact events so that we can also have a broader perspective into this what majority of the market will be looking forward to today. And if you look at what we have here, you will see that today is laced with a bucket full of speeches coming in from both the United States and the United Kingdom. And one important thing about the speeches, especially considering the position of the speakers that we'll be talking today, most of them are representative of either the Bank of England or the Federal Reserve. The speeches hold considerable influence over the financial market. Now, their remarks here today will be providing us insights into the bank's monetary policy stance, economic outlook, and potential future policy actions. And this, of course, will significantly impact market sentiments as traders and investors will closely be analyzing the rhetorics for clues about future policy directions. Now, besides the handful of speeches here are a couple of economic features. One of them is the Housing Price Index, which is released by the Federal Housing Finance Agency and provides an estimate value of housing market conditions. As you all know that the housing sector is considered to be an important indicator and sensitive factor to the U.S. economy. And generally speaking, a high reading is seen as positive, which is in the long run is expected to form a bullish traction in favor of the US dollar, while a low reading is considered as negative. Now, if we look at the previous data for the month of September, it came in at 0.6%, and we have consensus projecting a 0.4% for today. Now, we'll look forward to see what the actual data is going to be like, but from what we can see from what economists are saying, it appears that there is likely going to be a little bit of contraction from that sector. So let's see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectations? So with the handful of impactful events we have here, I want you to note the timing, as we will need them whenever we are close to that time. We want to be looking out for structures that will be guiding our decisions prior to this event. So with that being said here, let's dive right into the business. And the first asset we will be looking at, as usual, is going to be the USOILSPOT. Now, on the USOILSPOT, the week did not really start very well for us in this community, as we had a sell position triggered yesterday. Remember, we talked about selling if price action did break down both the $75 level and the $74.80 area, which actually happened as we saw price action move about how many pips was that? Moved about 80 pips on the first position and moved about 60 pips on the second position before the bullish momentum came in to take us out of those positions. And immediately that happened, we saw how buy pressure resumed, triggering the buy stop order above the $75.75 level, and unfortunately that one too was taken out in a loss. So the week did not really start very well for us here on the US All Spot, but the week is still very early, and the chances that we will be having new positions along the week through the course of the week to recoup the loss we incurred and in fact make some money on top of it. However, it is important for us to also know what has really been the driving factor behind the scenes of price action on this particular asset. Now, yesterday we witnessed how oil prices experienced a decline of about 0.2% due to a delay in the OPEC Plus reunion with members in disagreement over production targets. But I think this was settled during the later part of yesterday. And in light of this drop, analysts are anticipating OPEC Plus to potentially extend or deepen production cuts into the coming year. And as market participants await tomorrow's release of US gross domestic product data, which is another impactful event, especially an asset which is a US dollar driven, the market is in a state of anticipation right now. However, if we look at the structure from a technical standpoint, and for the sake of those who missed out on our earliest editions, remember that we had a range here between the $75.75 level and that area around our key level and the $74.80 area to give us an insight into the level of indecision in the market at that point in time. And of course, you know how we do it in this community. Whenever we have this kind of range appear on our chart, we do want to exercise patience and wait for either the breakout or breakdown of the range to happen before we want to capitalize on the next move. So we had a sell position, got taken out. We had a buy position, got taken out in a loss. And right now, price is in a consolidation phase where both buyers and sellers have a tendency of moving price in their favor. Now, with the information we have here, how do we intend to plan ahead of today's trading session? What are the things we want to be looking out for? Well, personally, I already have a buy position triggered, but for the sake of those who missed out on yesterday's trading session, let's run through the higher time frame so that we can have an holistic perspective into what we saw at the beginning of the week, and then we will be going back to see how we will position ourselves for today's trading session. Now, on the 4 hours time frame, this is what we did at the beginning of the week after taking into consideration the nature of price action in the last 2 months. And what we saw here is quite obvious that price action has been very bearish. And after connecting the series of lower highs, we have the resistant line of that descending channel. And then after connecting the series of lower lows, we have the support line of that descending channel. And this makes it quite interesting for us as we have something that we will be using to guide our trading decisions for this week. And of course, when we have a descending channel, we do expect that as long as price action still remains within that channel, we want to be looking out for selling opportunities. But at times, its price may not do that. Instead, it might be planning to break out of the resistance line to incite a reversal setup. Now, if we look at this current structure, and in addition to these trend lines we identified here, remember that we also acknowledge the importance of the $75 level, which I said will be serving as our key level for this week. And if you look at the structure closely, you will see how this level had played a major role in determining the direction of price action since the beginning of this month. At some point, it was a buying niche, as you will see here, before price broke down the structure during the mid-month. Then we saw price climb back above that level during the second week of this month, and since then price action has remained above the $75 area, as every attempt by the sellers to break through the structure has been met with stiff resistance from the buyers. And for me, you would agree that we are at a crucial juncture in this market. We are depending on how price reacts to the $75 area will determine what our next line of action will be. And for those of you who are with us in this community for a while, you know how we use our key levels. Whenever price action is above our key level, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now look at what happened around this area since the beginning of the week. We've seen a lot of choppy situation around that area, and we saw an engulfing bullish candle spring out from the $75 level during the early hours of today. Now, with the information we have gathered here on the 4 hours time frame, the question now is, will the bullish momentum continue in such a way that it will break out of this descending trend line to incite an uptrend situation? Now, scaling down into the 1 hour time frame so that we can have a better perspective into what is going on here. And like I said earlier, that price action is currently range bound, as price has been ranging between the 75 level and the $74.15 area. Now there is something distinctly observed within that range, as you will see here. After price tested the lowest point for this week at the $74.15 level, we begin to notice the appearance of higher lows in this particular market. As you will see, the second attempt by sellers to break down the previous low failed around the $74.60 level. Then the next attempt again failed just around that key level. Now when we connect a series of higher lows here, we have a beautiful ascending trend line within that range that we will be using to guide our trading decisions for today's trading session. Now, of course, you know, when we have ascending trend lines like this, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, with a buy stop order placed back again after being stopped out yesterday around the $75.75 level, I have another buy position triggered at this point in time. However, if you are joined the bullish momentum early enough, maybe around the $75.30 area, well done to you, as you will currently be running with about 60 pips. So if you are taking it from this level, I would suggest that you move your stop losses to break even, secure these current positions while we continue to monitor price action. Now, for those of us who had missed out on this opportunity, we are going to exercise patience at this juncture to wait for new setups to give us an insight into how to capitalize on the move. Now, what is it that we are going to be looking out for? Now that price action had broken out of the resistant line of that range at the $75.75 level, I will be suggesting that let's allow price to move a little bit further, and if it comes back to retest the structure that was broken, then the appearance of buy pressure around this area or the transition into a reversal pattern will give us good opportunities to join an uptrend move. So one thing we want to note here is that as long as price still remains above this ascending trend line, we shall feel comfortable in our buy position. So all stop losses on all buy positions should be right below that ascending trend line, as if price breaks down, then we might likely be seeing a reversal setup. So on the US All Spot, we maintain a bullish bias at this particular junction, and if price action goes on to break out of the highest point that it had gotten to for this week, which is located at the $76.25 level, we will be looking out for additional buy positions above that structure. Now, another thing I would like to call our attention to is the resistant line, this descending trend line that we identified on the higher time frame. A breakout of this trend line also will give us good confirmations that buyers are getting stronger as well. So let's see how the market will play out. I maintain a bullish bias on this one. Now, in as much as we're looking out for buying opportunity, you know how we do it in this community, we also want to keep tabs with the opposite direction as well. And if that is going to be the case, what is it that we want to see on this chart that will make us change our bias from bullish to bearish? Now, remember I mentioned earlier that we have this ascending trend line duly marked out on our chart. So as long as price remains above the trend line, we feel comfortable in our buy position. But if at any point in time today price breaks down the ascending trend line, then we might likely going to be seeing a bearish move to the downside. But it's reasonable for us to exercise patience and not to get too excited at the breakdown of structure, as we want to wait for confirmations to happen, like a retest of structure, which will reveal to us that buyers are finding it difficult to climb back above the ascending trend line, after which we shall feel comfortable selling. Now we have multiple levels such as the 75, the $74.80, and of course the $74.50 area to capitalize on the downtrend continuation. And if price action goes on to break down this level here, then at this point I will feel more comfortable with the sell position here. But as it is right now, we maintain a bullish bias. Price still remains above the ascending trend line, and the only condition that will make us consider selling the US All Spot is for price to break down the ascending trend line. So these are my simple views on the US All Spot for today. I encourage you to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, after which we will be moving on to the next asset on our watch list. Hello, Steamroller. Good morning to you. Glad to have you around with us this morning. I didn't see you yesterday. Trust you're doing very well. Mr. Nator, okay. Jenny Ho, Kite Soft, Aki88. Good morning to you guys. FZLP, good morning to you. Queen Wild, good morning to you. Mura Said and Marketer, good morning to you guys. So I'm not seeing any questions here. So in the absence of no questions, I do want to take this as a confirmation that we are good to go. So I will be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100. Well, yesterday was a little bit interesting. Remember, we had a buy position triggered yesterday after price action broke out of the 15,965 level, and in fact price moved about 80 pips in our favor before the bearish momentum came in to take us out of that position. And I do hope you moved your stop losses accordingly. Remember, in this community, whenever price moves considerably well, we move our stop losses to secure positions, and if you have done that appropriately, you must have been taken out with a reasonable amount of profit so far for this week. So congrats to everyone who capitalized on that bullish move before that bearish momentum came in. Now, as we gear up for today's trading session, how do we intend to capitalize on the next move, as we have been noticing selling pressure in the last, I think, about 12 to 15 hours now in this particular market, as price action is back into that range we identified at the beginning of the week, just exactly within the 15,965 and the 15,925 area. So for me, this is a crucial juncture here, and we want to see how the market will be reacting to the structure. Now, before we go into the details here, I want us to scale up into the higher time frame, especially for those of us who missed out on our earlier session, so that they can also be on the same page with us all. So for this week, we started the analysis. I think we started on the 4 hours time frame, right? Okay, I think we started, yes, on the 4 hours time frame. That was where we started our analysis. And on the 4 hours time frame, it was an interesting setup which we saw here. Very, very simple setup. The first thing here is quite obvious that price action has been very, very bullish since the beginning of this month. And as a result of this momentum, you will see our price action had gradually transitioned into an ascending channel. Now, when we connected the series of higher highs, we had the resistant line of the ascending channel. And then when we connected the series of higher lows here, we had the support line of the ascending channel. And for the fact that price still remains within the ascending channel, we definitely want to be looking out for patterns and structures that will support the idea of buying that asset. And the only condition that will make us want to consider selling is for price to break down the support line of this ascending channel, which is yet to be broken. Now, in addition to these trend lines are a couple of more levels that we identified yesterday, but the most important one is the 15,900 area, as you will see here. And what we did to get this was to take into consideration the nature of price action in the last 2 to 3 weeks, and you will see how this level had a 15,900 had played a major role in determining the direction of price action. Now look at what happened here mid-month. We saw how this area was a selling niche, and this lasted for about a week or so before price action finally broke out of the structure during the previous week. Now, since price broke out of the structure, price had remained above that area. As you will see, every attempt by the sellers to break through has been met with stiff resistance from the buyers at every point in time. Now look at what happened here about an hour or two ago. Price came back into the structure, and interestingly, we begin to notice some buy pressure resume around that area. Now the question going into the New York session today is, will the 15,900 become a platform that will incite the next wave of bullish momentum on this asset? Well, we need to see how the market participant will react to that level. Now, another thing that makes this whole structure very interesting is the fact that we have a beautiful confluence between the 15,900 and the ascending trend line, which happens to be the support line of the ascending channel. What a beautiful sweet spot that is for us. So depending on how price reacts to this area will determine what's next to do. But at this point in time, price remains above the key level, above the support line, all which is in alignment with a bullish expectation. But if at any point in time today, price breaks down both the support line, that is the ascending trend line, and the 15,900, then we can now start considering selling at the retest of structure. So that's the only condition that will make us to sell the USTech100 today. Now, with that being said here, let's see where we want to be joining the next bullish move if price still remains above the 15,900. Now, to do this, we will be scaling back down into the 1 hour time frame. And like I told you earlier, we can see our price is back into that range that we identified at the beginning of the week. As we saw, price confined within the 15,965 level and the $15,925.50 area to emphasize the indecision at the beginning of the week. Now remember that we had our first buy position at the breakout of that resistant line, and for me, I'm of the opinion that we might likely be seeing another breakout in the nearest future. Now, one of the reasons why I will continue to hold on to a bullish bias here is simply because of this. Now, look at the structure here. This is the lowest point price action has been for this week, exactly at the 15,900, which happens to be our key level for this week. And you know how we do it in this community. When price action remains above our key level, we want to continue to look out for patterns and structures that supports the idea of buying. Now, the next attempt by sellers to break through the previous low happened about 3 to 4 hours ago, as we saw as soon as price got into the 15,925 level, we begin to notice set buy pressure resume again. So what this simply means is that sellers are finding it difficult to break down the previous low here, and if we begin to notice higher lows on our chart, it's a clear sign that buyers are gradually gaining momentum beyond the sense. And when we notice higher lows, the next thing we want to be doing is to connect the series of higher lows so that we can have a trend line to use in guiding our trading decisions for today. Now, with the trend line marked out right now, let me bring back the candle chart and let's connect the points together. Okay, I think we are good like this. So what this simply means is that as long as price remains above the ascending trend line, we shall feel comfortable in a buy position. Now, with the situation we have here, let's place a buy stop order one more time above the 15,965, and remember that you want to be having your stop losses in place. Stop loss will be right anywhere below the ascending trend line. So below the ascending trend line will be about 30 pips, then maximum about 40 pips thereabout if it moves to around that support line at the 15,925.50. So I maintain a bullish bias on the USTech100, and I will be looking out for more opportunity if price action goes on to break out of the $16,010 level, as you will see right here. Then we will be adding more position if it so happens that price action breaks out of the highest point that price action has been for this week, which I will round it off to the 16,050, making it a psychological level to look out for new buying opportunities if price breaks out of this level. So you do want to be marking out that level too as well on your chart, and let's see how the market will play out from this point. So another buy stop order above that particular level. So these are my views as regards to buying the USTech100 today. Now, if it so happens that the buy pressure fails and price goes on to break down the ascending trend line we just identified this morning, well, I will only feel comfortable if price action takes out all the buy positions within the key level that we identified on the higher time frame. So I would want to see price take out that zone before considering selling this asset. But one thing I'm also considering here is if it's possible for us to sell even before the breakdown of the 15,900 happens, so that we can maximize the potential of the bearish move if that would be the case. Now, if we look at the ascending trend line here, let's see if a breakdown retest of the structure will give us an opportunity to sell. So breakdown retest, and we begin to see signs that buyers are finding it difficult to climb back above the ascending trend line, then we can join a decline, then have a sell stop order below the 15,900 level. But at this point, we hold on to a bullish bias here. Price remains within the range we identified at the beginning of the week and also holds sway above the ascending trend line. So bullish bias still remains the same. Let's see how this will play out, and tomorrow we shall be back here again to review how well these assets have been doing. If you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. I see you all guys. Askari, Nayek93, F4 Vahid, Kepe Nam, I hope I pronounced that correctly, Ruby89, and Raimon Spru, good morning to you. Kempachi, good morning to you. All right, there are no questions. All right, so I'll take that as a confirmation that we are all good to go here. And in that regard, let's move on to the next asset on our watch list. So the next asset on our watch list for this week is the GBPUSD. Another interesting situation going on in this market, as you will see that this market is gripped with a lot of uncertainty as price action remain confined within a wider range since the beginning of the week of the 1.26380 and the 1.261, one area to emphasize the level of indecision going on in this market right now. Now, the pound sterling, despite the choppy situation, the pound sterling continues its upward momentum with both buy positions still active at this point in time. Remember, we had our first buy position triggered at the breakout of the 1.2611. We also had the second one at the 1.26270 level, which was duly identified during our live session yesterday. Now, the US dollar at this juncture remains on the defensive, and this is impacted by the sluggish US Treasury bond yields, while market attention is focused on speeches from Fed officials and, of course, the Bank of England officials later today for trading signals on where we are going to be going. The strength of the pound reflects the UK's economy's resilience against tightening measures by the Bank of England, and interestingly, recent reports from the US delivered a concerning update indicating a sharp decline in the new home sales data for October, which we saw on the economic calendar for yesterday, and this was attributed to elevated mortgage rates. Now, in anticipation of these pitches coming up from both economists today, how do we intend to capitalize on the next move? Will the bullish momentum here be sustained, or are we likely going to be seeing some sharp movement to the downside at the resumption of the US trading session? Well, for the sake of those who are not part of our live session yesterday, let's run through how the week started for us and what led to the decision that we made buying this asset for this week. So the first thing we saw at the beginning of this week right here on the 1 hour time frame was this range where price was confined within the 1.26110 level and the 1.25910 area. Now, you know how we do it whenever we have this kind of range. We exercise patience and wait for either the breakdown to happen for us to sell or the breakouts to happen for us to buy. And at no point in time we saw price come close to the support line of that range, hereby negating any idea of considering selling this asset. So we bought there, and currently we have price running with about, let's see, the first buy position is running with about 22 pips in profit, while the second buy position, if you are taking it, is running with about 6 pips in profit. So we're still going to be maintaining a bullish bias on this one. I will suggest at this juncture that we should move all stop losses to the first entry point, which is around the 1.26 110 level. Now, while you move your stop losses, please always remember that you do want to be giving enough breathing space for price action to move around. So take that into consideration while you move your stop losses accordingly. Now, with that being said here, with a well secured position at this juncture, let's scale up into the higher time frame so that we can have an holistic perspective into what is really going on in this market. So in that regard, we will be looking at the 4 hours time frame. And for those of you who are part of our session yesterday, you will be familiar with this current structure as we took into consideration the nature of price action in the last 4 to 5 weeks, and what we were able to find is that price action has been bullish in the space of this time. And look at what we have here. Price action gradually transitioned into an ascending channel. So after connecting the series of higher highs, we have the resistant line of the ascending channel. And when we connected the series of higher lows, we have the support line of the ascending channel. And of course, when price is within a range like this, which is ascending, we want to be looking out for patterns and structures that supports the idea of buying that asset. Now, there's another thing that I would like to call our attention to, and that is the fact that price since last week Friday has been trading around or along, let me use that word, along the resistant line of that ascending channel. And you know that when price gets to the resistant line of a channel, of an ascending channel, we expect selling pressure to come in, just like it has always been doing. As you will see, selling pressure to the downside. The same thing also happened here. And are we going to be seeing that same situation happen around this area again to push price to the downside? Or is price going to break out of the resistant line to incite an uptrend move? Now you can see how crucial this current structure is at this point in time. As we can see, we have a rising wedge here, which more or less suggests from a theoretical standpoint that price may drop to the downside. That is, if price breaks down that wedge, that will welcome selling opportunities here. So the area we are right now has a tendency of either pushing price to the upside or to the downside, and that is one of the reasons I did mention that everyone who has a buy position should move our stop losses to secure the position, as the persistent selling pressure around that 1.26450 area is a suspect for us at this point. Now, with the information we have gathered here on the 4 hours time frame, let's scale down into the 1 hour time frame to see how the market has been performing since the beginning of this week. Now, that is the resistance level of the ascending channel we identified on the higher time frame, as this is the highest point price action has been for this week. And in fact, if we want to be adding more buy positions to our existing trade, we want to see price break out of the 1.26380 to give us an opportunity to join the uptrend continuation. And don't forget, I added another structure here today that we will be using to guide our trading decision, and this is the ascending trend line I was able to spot here after connecting the series of higher lows since last week Friday. So this trend line here will maintain our bullish bias. As long as price remains above, we continue to hold on to that bullish outlook on this particular market. However, in as much as we're looking out for buying opportunities, we cannot ignore the potentials of sellers, as we do not know how market participants will be anticipating the event for today's trading session, and in fact we do not know what the officials of both the Bank of England and the Federal Reserve will be saying as regards to the economic outlook on their respective government. So in that regard, we are also going to be taking into consideration the potentials of sellers too. Now, what is the condition here that will make us consider selling? Well, personally, for me to consider selling here, I would want to see price drop below the 1.26 110 area. If that happens, then price would have also broken down the ascending trend line. And if we are lucky enough, if price comes back to retest structure, we want to be joining the decline to the downside. Or we could see something like a breakdown like this, retest of the structure. Then we have our sell stop orders below the 1.261, which happens to be our key level. And in fact, if price would drop below that structure, we do want to be selling. Then the 1.25910 level, which happens to be the lowest point price action has been for this week. And if that one also gets broken to the downside, we will be joining a bearish momentum. So at this point, we still maintain the bullish bias. Ensure you move all stop losses to your entry point around the 1.26110 area while we continue to monitor price action here. So these are my views on the GBPUSD for today. Very simple setup we have here. So let's ensure that we mark out these levels and trend lines, as we will be using them to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. As usual, I will be taking the next 10 to 15 seconds off, waiting for inquiries before we move on to the last asset on our watch list for today. SGC, good morning. Okay, good morning, everyone. So I see your comment here from Kit Pin. Kit Pin says, so if you take a sell now, what's your suggestion? I don't think I understand what you're trying to say there. Are you suggesting to me that you want to sell now? Is that what you're saying? So if you take a sell now, what's your suggestion? Well, I'm not sure I understand what you say, but let me just do a quick recap of what I said so far. So I told you that we have a couple of parameters that we will be using to guide our trading decisions for today, right? I hope we're on the same page on that one. And one of the first parameters I said here is this ascending trend line here. And you know how we treat our ascending trend lines in this community. As long as price remains above the ascending trend line, we want to maintain a bullish outlook in this market. So we don't want to be selling above an ascending trend line. Of course, it doesn't make any sense at all. When we have an ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying that asset. And as a result of this ascending trend line, I said I will be thinking of adding more buy positions to our existing trade if price action goes on to break out of the 1.26380 area to maximize the potential of that bullish move. Now, I said here that if price at any point in time today breaks down the ascending trend line, then this will be a signal that price is likely going to be dropping to the downside. And I did mention that we do not want to be getting too excited, that we want to wait for confirmations before we jump into a sell positions. And one of the confirmations we will be looking out for are signs that buyers are finding it difficult to climb back above the ascending trend line, and this usually will reflect on the chart as either a retest of the 1.261 to join the downtrend or a retest of the ascending trend line to join the downtrend to the downside. So that is simply what I said here as regards to the setup. The only condition that will make us to sell the GBPUSD today is for price to drop and breach the ascending trend line. So I hope I made myself very, very clear here. Kingpin. Okay. All right, I can see a comment here. Oh, now I understand clearly. Thanks. All right, you're welcome. I'm glad you found that useful. All right, so with that being said here, and in the absence of no further questions, I will be moving on to the final asset on our watch list for today. So the final asset on our watch list for today is my favorite asset. That is the XAUUSD, popularly known as the gold spot. And since yesterday, we've had a buy position running, which has been struggling. And like I told you earlier, market participants are stepping aside, waiting for clues from the economic features for this week to decide if we are going bullish or bearish. Currently, the buy position still remains very active as we have about 13 pips running in profit as gold prices have broken through the $2,015 level during the Asian session this morning. Now, price action is now in a bullish consolidation phase, as you will see here that price action has been trapped within the $2,018 level and the $2,009.50 area in the last 18 to 20 hours now, I think. And this is the possibilities of rate cuts in 2024 has weakened the US dollar to a near 3-week low, supporting the potential for an extension of gold's recent uptrend. Now, we will continue to look for buying opportunities with the way things are going right now, as price still remains above that ascending trend line we identified yesterday. However, it is worth noting that market participants are a little bit hesitant to place aggressive bullish bets and are waiting for the release of the PCE price index from the United States, the GDP data too as well, and of course, today we are looking forward to the release of the Conference Board Consumer Confidence Index and of course speeches by FOMC members and representatives today, and this could give us some short-term trading opportunities which we are going to be discussing in a moment. Now, for those of you who missed out on our earlier sessions, let's run through how the week started for us here in this community and what led to the decisions of buying. Then we will now move into how we will be positioning ourselves for today's trading session. So at the beginning of the week, we saw price started the week on a very strong and robust bullish momentum, starting from around the 2050 cent level, as you will see here. Then we saw price climb to the $2,018 area, which happens to be a new high in recent times, giving us a range where price action was caught at the beginning. Sorry, that was not it. It was from here. This was a range right here between the 2013 and the $2,050 area. And remember, during our live session yesterday, we were looking at buying at the breakout of the $2,013 level. Though we have our buy stop order triggered and price has been struggling, it came down a little bit for a while, for about 6 to 7 hours before it climbed back again into that new range we have right now between the 2018 and the $2,013 level, where our center of focus will be for today's trading session. Now, for the sake of those who are not part of our earlier sessions, let's run through the higher time frame. Let's look at what has been going on here, what we saw at the beginning of the week. Now, at the beginning of the week, what we did on the 4 hours time frame was to take into consideration the nature of price action in the last 2 weeks, and it's quite clear that price action has been very bullish, and we connected a series of higher lows to further emphasize the strength of the buyers here. Then, in addition to this trend line, we were able to spot our key level at a 2005 area, a level which had played a major role in pushing price to the downside. As you will see, this level had been a very strong selling niche in the last couple of months, as every attempt by the buyers to break out of the structure was negated by stiff resistance from the sellers at every point in time. In fact, fast forward to last week's trading session, we saw the same thing happened around the 2005 area, and not until the beginning of this week that we witnessed price breaking out of that structure for the first time in the last 2 months. Now, with the scenario we have here, you will agree that we are at a crucial juncture, as anywhere above the $2,005 area makes quite a lot of sense to look out for buying opportunity. Now, the question as we head into the New York session today is, since we already have a breakout of structure, are we likely going to be seeing price come back to retest the structure in anticipation of another wave of bullish momentum, or are we just going to see price transition into an uptrend continuation pattern, breaking out of the $2018 level to incite an uptrend move? Or are there chances that sellers could come in where a breakdown of the ascending trend line here will incite selling opportunities? So for us to have a better perspective into what is going on here, we shall go back down into our 1 hour time frame. Now look at the 1 hour time frame here. We begin to see things more clearly. But the first thing I would like to acknowledge here is this ascending trend line we spotted on the higher time frame. Now, as long as price remains above this ascending trend line, we have no business considering selling at all. And in that case scenario, how are we going to be joining the next move? Remember, we have a buy position running at this point in time, and if you look at the structure closely, since the later part of the New York session and the Asian session, we saw price confined within the 2018 and the $2013 area. That's like a $5 range, to emphasize the level of indecision in the market as market participants anticipate the release of the Conference Board's Consumer Confidence Index and, of course, the speeches from the FOMC representative later today. Now, you know how we do it in this community. When we have this kind of flat channel on our market structure, we want to exercise patience and wait for either the breakout of the range to give us an opportunity to buy, or the breakdown of the range to give us an opportunity to sell. Now, with this in mind, I have a buy stop order above the 2018, which happens to be the highest point price action has been for this week. So if price can take out all the sell positions at the 2018, I'm of the opinion that price action will continue to move to the upside. However, if price drops below the support line of this range along the $2013 area, are we going to be selling? No, we are not going to be selling. And the reason why we are not going to be selling below the support line at the $2013 area is simply because of this ascending trend line we identified on the higher time frame. And of course, as long as price remains above that trend line, we want to continue to look out for buying opportunities. So even if price breaks down the $2013 area, price will still be within the auspices of a bullish expectation, as it could drop into the $2009.50 level or the ascending trend line to incite another wave of bullish momentum. So as long as price remains above the $2009.50 level and the ascending trend line, we maintain a bullish bias here. But if at any point in time today price action breaks down the $2009.50 level, price would also have broken down the ascending trend line. Then at this point, we want to start considering selling. But how are we going to be jumping into that sell position? Are we going to be placing a sell stop order right away, or wait for confirmations to happen? Well, to answer that question, we have to look at the structure, what the structure is saying. Now, if we look at the structure says the market has been very, very bullish in the last couple of weeks, which emphasized the bullish momentum here. Selling at this juncture will more or less be a counter trend opportunity. And if we do want to join a bearish move, we want to wait for confirmations to happen, like a retest of structure after the trend line is broken, something like price coming back to retest the structure, and the inability of buyers to climb up, bring price back above the ascending trend line will be all we need to confirm a downtrend continuations. And in fact, we have multiple levels like the 2005, the 2050 cent level to add more sell position if price action goes on to break down that structure. So as it is right now, we maintain a bullish bias. Price still remains above the ascending trend line, and the only condition that will make us consider selling the XAUUSD today is for price to break down the ascending trend line. So I encourage us all to mark out these levels and trend lines on the chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So these are my views on the XAUUSD. I do hope I made myself very clear. And if you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off. See if there are any questions before we round off for today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see your comments, Tim Roller. Thank you very much. I see your comment. Falcon Fish is just asking me now that what about gold? Is that a joke? We just finished talking about gold now. Did you hope you were part of the session? Okay, Kingpin. Okay, thank you for your compliments. I'm very grateful and glad that you found this very, very useful. So Falcon Fish even laughed at it. All right. So in the absence of no further questions, I want to assume that we are all on the same page, and I do hope that we've marked out these levels on the chart, as it's going to be a guiding light for us as we make our decisions for today's trading session. So today we were able to attend to four major assets, which includes the USOILSPOT, the USTech100, the GBPUSD, and finally the XAUUSD, all of which we were able to identify simple trading setups using fundamental tools such as trend lines, key levels, and chart patterns. So let's see how the market will play out in the next 24 hours, and we will be back here tomorrow to see how well it's doing. For those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And in fact, I encourage you to be part of our subsequent editions, as the more time you spend with us in this community, the better you will become in understanding our analytical approach, and eventually be able to use the information gathered here to make your own independent trading decisions. So I look forward to seeing you guys same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing so far and prepare for tomorrow's trading session, which promises to be an exciting and insightful one. Remember, we're looking forward to the GDP data tomorrow's session. So let's be part of another insightful edition tomorrow as well. Now, remember that I know that things might look a little bit ambiguous today because of the way price action has started this week. We've had choppy situations since the beginning of the week, and this shouldn't come to us as a surprise. As remember, I mentioned how everyone is looking forward to the major events from both the United States and the United Kingdom today, which has also allowed a lot of key players in the market to step aside to wait to see what the data will be before putting in their funds. So that is why we're having this choppy situation. So let's keep calm. Let's wait for the structures to mature. And trust me, by the end of the week, we're definitely going to be on the profitable side of our portfolio. So on this note, I wish us all the best of luck today and look forward to seeing you same time tomorrow. 10 a.m. UTC, 11 a.m. West African time. So trade smart, trade consciously, and I wish you a wonderful evening. Bye bye.